May I start, ma'am? Okay, so good morning, ma'am. Good morning, everyone. So today topic is where should we invest our money? According to me, whenever anyone talk about investment, people people immediately think about investing money in various assets like mutual funds, share marketing, buying gold, and yeah, purchasing land and buying another house for the rental income. But we often forget to invest on ourselves. Subha ma'am class is a great example. So yeah, so where we are not investing, not only investing our money, we are investing our time. And with us, Sobha ma'am investing her time, her time to make us better human.
Human being.
Yeah, human being. So I want to say one more thing, like golden rule of investment: never in never keep all your eggs in a single basket. Thank you. This
Uh,
much.
Yeah.
Good morning, everybody. Today we are here to moot on the topic where should we invest our surplus or abundant funds? That is, what should our investment portfolio look like? So, as my friend Sanju has rightly put forward, that we should not put our all our eggs in one basket. That is what we use the term diversification for this. That is like we should not invest in a single option. There should be a mix of investments. A portion of our surplus funds should be kept in fixed income, fixed interest income, fixed interest bearing securities like FDs and all, and a portion of it should be invested in equity. Me being from a middle class family, and me being uh, me having a low risk taking appetite, I would suggest 70% to be invested in fixed interest bearing securities and 30% in equity market.
Okay. Likita, what's your opinion?
I I want to add a few more points.
Yes, Ankit.
Yeah, yeah. So I want to add few more points on Kanupriya and
Please
Sanju
use.
Kanupriya.
Yeah.
Yeah. So in India now we have multiple option for investing the money. So it's completely depend on the individual's goals and priorities. So like we have multiple option, like can invest in the PPF scheme. We can purchase the bonds like government bonds or corporate bonds, and we also can invest in the gold. We can invest in the real estate and also a mutual fund. So in investment there is a one thing: if any investment returning is the more, then more risk will be involved. So it's completely depend on the individual goals, because sometime if we see the historical data of all this investment like PPF, LICs, fixed deposit are returning the like 7 to 8% per year. But the mutual fund and other than gold investment and real estate investment are returning like 10 to 12%. But mutual funds are returning from 12% to 18 90. It is not fixed, up to 24
Is
it is
it
returning.
so? That
Yeah,
mutual
based.
fund, there is more return.
Yeah, depends on the which kind of the mutual fund we are purchasing.
Which type of we should take? Matlab, which type of mutual fund should we take?
We actually there are three type of the mutual fund, right? So like if mostly this, if we are investing in the Nifty 50, at least it is returning 15% from last
How
10 to
many
20 years.
percent? How much percent?
At 15%.
Really, in Nifty and all?
Yes, based on the historical data, people are telling like this only.
Okay,
So
okay. That's a very
yes,
big amount.
No, no, ma'am,
so
it's not
that's
like that.
Huh.
For mutual funds, there is many kind of mutual funds. Like this liquid mutual funds and debt mutual funds. Debt means loan
Where you can take
documents.
loan.
Yes.
Huh.
The next one is Ankit said no, say Nifty. That is interest. I think index mutual fund. That means
Yes.
Nifty and Sensex. So that means that it takes topmost company in India.
Huh.
Around
Blue chip
Nifty is
companies,
50 and
profit
Sensex
making.
yes 30. Yeah, if the companies going growth means the Nifty is also going growth. You see the Nifty graph means past 10 years till now means the graph is slightly increasing only. So like that now people are telling Nifty is give 50% gain to us.
And everybody feels safe.
Yes,
Investing in
but
mutual fund for
more
the long
risk,
run.
more yes, more risk. If you invest the money in mutual funds, we not accept 5 years to 10 years. It's go to about 20, 15 to 20 years. Then only we
Put
gain
for
much
long term
For
more
the
income.
long
Yeah,
time. Yeah.
and
yeah,
forget about
yes,
it.
But this
yes.
Okay.
is risky
So
also, ma'am.
yeah, but the risks is involved, but returns are more, right? So
Yeah,
as I
correct. Huh.
already told that
But normally
it's
in
completely
mutual
depend.
fund, I have not heard too many risks.
But you can go
But
to the systematic investment plan. You can get this
For
more
that
than
also,
15%.
yeah.
Yeah, Kumarvel?
That if you go to that STP, the systematic investment plan, you can get the more than 15%. Example, the the Frankel turn and mid cap related funds you can invest. And carefully, you are not invest one fund. You can share, you can invest that 2, 3 fund simultaneously. Within 5 years, you can get it from this more than 15%.
No, SIP also is a long-term period.
No, that
SIP
is
is
the
also long term.
no.
Yes.
It's not a fixed. You not go to the 10 years or 20 years. If you want to 5 years also,
I
if
also
it
did
No, no,
for
possible.
no.
14 years.
SIP and mutual fund is not fixed. There is a entry load and the exit load. Entry load
Yes, correct.
there
The
is tax and
because of your unit, you can get it. How much unit
yes.
based on the unit, you get this money, correct? So how they invest, where they invest the money, the oil and gas, gold, and many sectors they will plan to invest. Based on that, you can get this amount.
Yes,
That
I'm
you can.
doing this mutual funds for past 6 years.
Yes.
For 6 years.
For this just I want to add some more comments on this. So like the people are telling about the SIP. So when it comes to SIP, there are three categories mainly. One is small cap and mid cap and large cap. So small cap means now the recently established companies, and mid cap means it's already established, but it's not in a Nifty 50. Nifty 50 means it's a topmost 50 companies. So those are all listed in the Nifty 50. And large cap, so those are all big blue chip companies, so those are all come under Nifty 50. So as many people told that the returns, so when they are talking about the returns, it's very much important to check their portfolio in the sense when it comes to SIP. So just we want to check which one we want to select. So suppose if we select mid cap, for the mid cap we want to check what is their return profit and what is their revenue. Some of the peoples nowadays we are seeing that IPO is also not working properly. So recently one of the bike selling company, those are all traders. Those are all not manufacturers, those are all traders. So they entered into a IPO and they started the IPO. So the people simply like blindly they are go and they are putting money in that IPO. So after IPO completed, they come to know that it's not a proper company because the profit and revenue is not proper. It's not like it's not going gradually in a higher move. So that's the reason, like volatility is the main important here. Even though even there the volatility is not there. So when we are selecting a SIP, it is very much important to check the funda of that company. So like if you don't want to check the funda, then we can go to like a mutual fund. So either we want to select commodity or mutual fund. So this is the best way to invest in share markets or investment.
so I
A particular company. You have to check some criteria before investing in a particular company, and that are first thing is you have to see how much the company is getting profits.
Okay.
After paying its expenses, what is its profit? And second thing is, how is it able to manage the outstanding expenses when it has some downturn, like when the profits are not up to the mark, and when the market condition is bad, how well the company is able to return the outstanding expenses. And one more thing is how much the company is gaining the money through long-term funds. Actually, I read a case on Google. It says that Google does not allow the investors to take the dividends. Like when you invest in a particular stock, you get dividend.
Correct.
And it does not, Google does not let the investors to take the dividends directly.
Why?
Because
That's
there
the rule.
it asked the investors that where do you manage this money? Then the investors told that same thing, like we would invest in mutual funds and all. And there the mutual funds interest rate is almost 3 to 5%.
Okay.
So what Google came with that is, anyways, you are not able to get a high profit with this amount. So we will reinvest the same amount in same company. In that way, it put lot of new ventures and all. So, and it started growing more. That
And
it gets almost 10% of dividend, ma'am. Almost 10%, very high. That is the reason it puts a lot of money in new inventions like the Alexa and all. So because the money is growing within the company.
And dividend means they must be getting it on quarterly basis or something?
Yes, ma'am. Actually, it should give the dividends directly to the investors, but instead of that,
they are re-putting it. So they are, and investors also might be happy that they are re-putting and in proper place. So they might say that yes, continue.
Yes, ma'am.
That is the thing. What do you think, Kavya?
Ma'am, I don't have much idea about all this investment. I just know that I've done some scheme for my son. After when he turns 18, he'll get that whatever paid till 10 years, and I don't know about investing at all. So I just know you pay for 10 years. Once he turn 18, it'll be like double the money for his education.
But that time, this whatever you are investing now, that double will have no value.
Yes, ma'am.
Yes, ma'am. But something is there, no, ma'am. At least I can see my all saving to my.
For me also, I belong to the same category, Kavya. And once my children got settled, I forgot about that. It's over. The main purpose, like one is, I have done little bit for my granddaughter, Sukanya or some Kanya is
Sukanya Samriddhi.
Huh?
Sukanya Samriddhi.
So after 18 years, up to 18 years, nobody can take out.
Yeah.
But after 18 years, you can
get 61 lakh rupees.
No, that is if you invest.
Invested, yes, ma'am.
Every year.
Every year, 51,000.
So there are many people who don't invest. That is also there. What do you think, Shashi? Anil, please switch on the video.
Ma'am, I want to tell one thing.
Yes,
differences between savings and investments. We told.
Yeah.
Savings and investments are both are different. Savings means if you want some money, if you want your income, if you have some income, that income you divided some amount in bank or deposit. If like example LIC, life insurance policies, some other future
planning.
Future planning, sir. But investment, if you invest, you can return or profit or loss. You don't know. If you invest that money or returns are not, you don't know. Investment is that type. Saving money is compulsory come back.
Saving money, because suppose if you invest in share, for example, that Satyam share, when Satyam became bankrupt or whatever it was, so when Satyam shares came down, it came down to 8 rupees. 8 rupees it was sold. So it comes down also. And
Yeah.
those who are trading on daily basis, they are gone. Any idea about crypto? Yes?
But ma'am, for investment, we need to learn at least we need to knowledge, because if we don't have knowledge about investment, if anyone said go and invest here, so that is not good for us. Yesterday you told your one student already invest, and after that he lost his all money. So for that we should need knowledge.
You must have,
Because
and nowadays I think there are coachings also.
yeah,
Yes,
because
ma'am.
without knowledge we
They
cannot
are
do it.
having running classes for especially share market classes, and I have seen dumbo person. They know how to invest. How much and all, I have no idea.
Ma'am,
There is many
stock
brokers,
market
ma'am,
is
for that.
very good this time. You
Stock
invest
market
your
is
money
very
for
good.
long term. You know, you analyze every day, every night your company. Not too much company. If 10-20 company, you selected 10-20 company and invest your money. Some amount, not full amount. But this is very good for this. Some company you return 50% 6 months, 100% 20%, 100%, 20% per day returning. I got, ma'am. I know.
You got in some company.
Yes, ma'am. I
Can
know
you tell us the
everything.
name of the company?
No, ma'am. This is
That's secret. We'll also invest little bit.
Ma'am,
I'm very scared of share market.
I am
Never invest.
scared, but 2-3 year I invested money. I'm happy with share market so much. Mutual fund SIP is very good. Fixed deposit is very bad this time. You get return 10 to 12 year for 10%, 20%.
But
You
we
invested
invest,
stock market.
we oldies.
Yes, ma'am. Yes, ma'am.
We
I know, but
invest
you
in fixed
invest
deposit ki at least the money is safe. For us, God knows when we go on top.
Someone saying IPO. I got IPO Bajaj Finserv. I got 1 day profit 140%. Yes,
So
ma'am.
do you do trading daily?
Yes, ma'am. I also do intraday someday profit and loss, but this is good. You have knowledge, you should do it. This is
Are
very
you
good.
doing
But
for some
my
other
opinion
people?
not good saying to anyone.
Are you doing
You
for some
have
other people
money.
also?
You have extra money, you invest share market. Yes.
But both the sides is there, ma'am. But is that good or bad is there?
Yes,
But
both.
final,
But
by
you
no. First
analyze
you listen
every
that.
day, every
You
night.
can, I think you can allow to speak with me. So
Shashi.
Yeah, what is the problem in this share investment? You can anyway, the end of the day, you can give some amount to the government, correct? That interest.
Government, you earn 10 lakh, 20 lakh, but then you are sending. You are earning 10 lakh less. You don't send so much tax.
No, broker charges
You
there,
don't give
correct?
so
No
much
broker
tax.
charge, 20 rupees, 30 rupees broker charges. You earn 10,000, 20,000, then you send 20, 30 rupees broker.
But yes, she has got complete
Yeah.
knowledge, I feel. Of
I
share
know.
market. Whoever wants to invest in share market, contact Ekta.
No, ma'am.
No,
I
she's
don't say.
No.
Yeah.
Really, you charge from them and start means you have got good knowledge.
Even last week I have profit also, ma'am.
So all are
Yeah.
sitting and investing only.
Yes, ma'am. Stock market. This time stock market is very good.
Good.
For everyone. House worker, housewoman, housemaker was very good to invest in share market.
But where you're investing in options or in direct investment? How you doing?
Option, option equity. I don't commodity, but equity and option.
No options.
Dhanush, contact
madam.
number. Okay. Shashikant, what's your opinion?
Ma'am, I believe in secure investment like PPF, Public Provident Fund.
Loud.
Actually, ma'am, I believe in secure investment like Public Provident Fund, recurring deposits, and.
Okay, PPF and
Actually, my father is retired from Senior Postmaster from Indian Post Department. Sometimes my elder brother suggested him to invest in private. They told that no, I don't need to earn much money, and I want to invest in secure investment. Like they invested in monthly income scheme of MIS called
Shashi, to be very honest, we retired people, we want that type of investment where monthly we get some amount of money, so that it's a big thing for us, yeah. It's a big thing. Because if a retired person is getting a monthly one particular income, he'll feel that he or she will feel that, okay, I'm still getting some amount on monthly basis.
I mean, in that case, a FD is much better for overall. It's a tension free, and for shares, you have to be monitored.
Shares and all only Ekta type person can do. I can't do
FD is
Ekta.
not good
FD is
for
much
this time.
better option.
No,
So
we don't have. We want to enjoy life. How many years left? Go tilla. We don't know. How many years are balanced? So at least one amount, that much I must get, because you see, when you grow old, only you need one particular amount, huge amount for medical.
Yes, ma'am.
And there are some medical.
Ma'am, without no, if we don't have the proper knowledge in the share, also we can invest, because there are some few tricks. Suppose we want to invest money, right? So we should not rely on the single sector. Like we in our investment, so diversity should be there. Like we cannot rely on the one sector. Like we can invest in the multiple sector, like healthcare, finance,
By chance, one
IT
goes
sector.
down, second one will be
Because
there standby.
same time all the sector will not come down.
All
So
that.
simply we can
Right.
invest like this.
Sharanya, you are very silent.
I have no much knowledge about this stock
Investment.
market, ma'am.
So
Yeah.
you must be investing in gold.
Yes, ma'am. Monthly, I'm paying. Yeah.
Monthly you are paying. So you have become like a member of something that you pay monthly, and then you
Have scheme, ma'am. 12, 11 months.
Yes, ma'am.
They will
Kind of scheme. Yeah.
And then when that much period you have invested, then you can go and purchase that much amount.
Yeah. Yes, ma'am.
Okay, that is like keeping some money every month and then buying.
Yeah. It's like savings, ma'am.
Savings. Kalandar?
Ma'am, you are seeing now cryptocurrency information.
Arey Babu, I have not seen what with my own eyes. I don't trust it. Okay, I don't know what is cryptocurrency. Kabhi dekha hai? I have never seen. So when I have not seen anything,
This is
and what
digital,
will I
ma'am.
do? Arey Ekta, my life is limited. That much amount I have got that I can spend my money with roti dal. I am not that of 5-star. And in fact, in old age, you can't even eat that halwa and puri every day. Doctor says, don't eat this, don't eat this, don't do this. You can't travel, you can't do this. So how much we need in old age, that much is enough. And medical emergency, therefore, that you must keep. Because after you are, you have crossed 65, even the policies become stupid policies. See, if you get some major disease, they don't cover. They cover only a limited amount.
After 60, ma'am, don't LIC don't give you any benefits.
But before 60, if you have invested, at least monthly they give us pension.
Ma'am, yesterday you were talking about that banks provide, like if you have invested some amount in banks, only 5 lakh is...
Only 5 lakh. That is bank bail-in policy.
Ma'am, but like compared to banks, post offices are safer because 100% of the amount is backed up by the government. So like
Correct.
if we are
But
invested...
interest is very less.
No, it's same, almost of same amount level.
Same amount. So in bank, there is bail-in and bail-out policy. If it goes, and then this is a legal thing I'm telling you. Previously, it was 1 lakh. From the time Mr. Modi has come, it is 5 lakh. That is promised.
In post offices, if we invest 20 lakhs also, it will be backed up 100%.
It will be there for you. So somehow people like us in this age, we say, whatever was mine, whatever I have invested, actual money, at least it is there. It won't be washed away.